So we had the FOMC meeting today, not that much of an eventful meeting as well as trading session because we did close right about flat on the day, only down 0.02%. We did actually have a very eventful day based on the flow, which I'll get to in a second. But just based on SPX, we still are within this supply zone, the purple range you can see right here, roughly between 4,550 to 4,575. So about a 25-point range. And you can see we've had actually two main rejections off the top. And you could argue that today we also had a third rejection off the top of this range, and it's still resilient up here because each time we have touched the top and had a rejection, it's been able to stay within this box, even though over here I did have a little bit of downside into my reversal date last Friday, which did go up afterwards into the top of this supply zone and then had a minor rejection after. But based on the rest of the week, or at least what I'm looking for the rest of the week, as of now, we still are within this purple range. Personally, I still believe we're going to have some form of a pullback, especially into the middle of August. However, first, we definitely need to see this low get taken out for that to take place. So roughly this 4,528 level has to break in order to see a lot more downside. This is a bare minimum. Once this breaks, then 4,500 will come quickly after that. And then we can start to go down back into a previous zone, as you can see from down here, the red, which I've shared before. But this definitely has to go, and this will be confirmation of further downside. So because the trend is at least in the intermediate term up as of now, I am trying to step in front of a moving train basically, which isn't always the best option unless you have a good risk practice, which in this case for me, personally, my stop is about 40 points, at least a daily close above. So roughly 40 points or so would be my stop out. If you're more risk adverse, it is probably better off for you to wait for confirmation below Thursday's low of day, more specifically my 4,525 level, but you can make that a range, 4,525 to 4,530, let's say. It's about 5 points. If we do see, especially an hourly close below this mini range over here, then we're very likely going to see more downside to it, the bare minimum 4,500. But personally, I believe we still have a pullback to sub 4,400 in early August. So basically the trade setup here, if you don't want to trade while the intermediate trend is up, it would be a 1 hour close below this level with a stop if it pops back up within the previous range and it doesn't have continuation after. This would be a little bit better of a setup, but personally from up here, there still is a viable short setup as long as good risk mitigation is in place, because remember, the intermediate trend is still definitely up. I'm just trying to predict when we have some form of a short-term pullback before upside later on in the year. But something else I want to talk about really quick is the dollar. We have reached my first target, or actually beyond my first target of that 101 level from back here when we did retest this key trend line. This is the one that goes all the way back to the 2000/2001 time period, so well over 20 years ago. And this had a very strong bounce off the retest, and we went up past my first 101 target, and right now it's basing before it continues up to around 102. I believe that would probably be the max of this upwards bounce move before further downside on the dollar. A stronger dollar can put some pressure on equities, which in turn would put some pressure on the main indices, specifically the Dow as well as the S&P 500. So I would like it to hold above here and then continue after it's done basing over here. So something simple to watch for as well. And as long as it stays above this level, then it will be relatively neutral to bullish in the midterm time range. But something I really want to talk about here as well is this ticker, which personally before today I had never looked at before. It is MDT. And what we saw actually looking over here to the order flow was around 227 Eastern. There was a very unusual call that came through. It was an opening order. There was zero open interest on this contract before today. And then we saw 20,212 contracts get bought by this whale. They bought out the money contracts with an expiration of only a couple months out. So that's the October 20th expiration. Super unusual all across the board. First of all, this ticker doesn't get as much volume compared to all the other ones you're going to see here on the feed. So that in itself does make this order unique. Also, the fact that there is zero open interest on these contracts, super rare there. And then also the sheer volume of contracts, and with that volume, the amount of premium behind it, unusual. You just typically don't see this overall, and they did get it above the ask as well. So all across the board, a super unusual print. So personally, I'm going to be following this one. As you can see over here, just a simple chart analysis. It did break out today, as you can see over here, just based on this trend line. A very simple one. There's actually two trend lines you can consider. This would probably be the main one. So it broke out out based on last Thursday and then had a minor retest of around this range. You could also argue that this is another trend line based on the high from over here, but I prefer this line over here. So it did break out based on last Thursday, and this whale expected there to be a lot more continuation after, so they ended up buying those contracts that I just showed you today, and MDT did close up green on the day. What we're going to want to see for more continuation later, especially to that strike that they got of 95, you're going to want to see a break above this 92 roughly level. It's a previous rejection site for this ticker all the way back in late April of this year. So if this is retested soon, which is likely going to be the case, you'll want to see a break above. So if it does break above this roughly 92 level, then it's almost certain you will see some more upside, potentially even to that 95 level, which is their strike of choice there. So potential setup, at least for an entry here, if you were unable to get in today based on the print that hit the tape around 2:27 Eastern, potential setup here is either one, trading the break above this level of roughly 92. That's one possibility. That could be intraday. So an hourly close above that 92 level or the previous high from over here, which is roughly 91.93. A 1 hour close above, you could potentially enter contracts on that. Could even be the same contracts that this whale ended up buying. These are probably going to be a little bit more liquid now that there is a lot of volume behind it. But then also another potential one is if there's a pullback, maybe tomorrow or Friday, especially after a strong daily close from today, there's a possibility to add on a dip if there's a slight pullback before it continues up, kind of like what we saw over here where we saw the breakout on last Thursday, and then the following 3 days were kind of a pullback followed by another break to the upside over here. So this pullback can also provide a adding opportunity. I actually prefer the pullback in this case, but under no circumstances can it get back below this trend line here. This is the breakout trend line. So if a daily candle closed below here in the future, then that would negate this possible setup of more upside. And of course, you can still follow this whale as well, because if they are not interested in the position, then they will end up selling these calls, which should show up here on the tape as well. So I'll continue to monitor this position. Very interesting one, very unusual overall. You don't typically see these, like I said before. And there's two possible entry sites, either a pullback or the break above this 92 level. So I will be watching for both of those. Also, here's a quick dark pool update for you guys. And remember, because there's the new update here on Cheddar Flow, you can filter much farther than the last week of dark pool prints, but I'm just going to go here to the start on Monday, between Monday and Wednesday of this week, and then click search, and I'll look for those SIG dark pool prints. You can see already here the three largest prints between this time period. But if I scroll down, you can see the first one came in. This is the one from today. It was 2.5 billion worth of premium at the 455.41 level. There's another one right below that at 1.6 billion in premium. So very interesting level, about a 1 cent off for each of these, 455.41 and 455.40. Both of these have a decent amount of premium behind it. And if you look over here to SPY, just to mark that off on a chart, we can see just based on the close from today, we closed just a tad above this level. So I'm personally going to mark it on the chart just because this is going to be a useful level in the future, and it would be a good marker of bias if we're able to stay above. That would provide a little bit more short-term bullish bias if we're able to stay above, because we did close above today. But typically the after-hour session, or at least future session following an FOMC, can be pretty erratic. So we'll see where we open tomorrow, but use this as a pivot for tomorrow. If we stay above, there's more of a short-term bullish bias, I'd say, all the way into the end of the day Friday. Otherwise, if we can get back below, then you can see some more downside here. So keep that in mind going forward into the rest of the week. This is an important level. And then lastly, we did have one more print over here, which is 2.2 billion worth of premium at the 454.12 level. So a decent amount throughout the week so far. Nothing too crazy, but we've seen multiple $2 billion plus prints. So I'd consider that to be a decent amount, and they're all around a similar level. But other than that, continue to watch this level I just provided to you. Going to be an important pivot into the end of the week and can provide a short-term bias all the way into that close on Friday. So I'm going to be watching this, especially wherever we open tomorrow on the day for SPY. There certainly can be another pop, especially because Thursday and then mostly Friday are green most of the weeks, especially throughout this year. So there's potential for one last pop to the upside before that pullback thesis plays out that I'm watching for into the middle of August. But other than that, continue to watch this level on SPY. I'm going to continue to watch MDT because there's a potential setup here. I'll be watching for both of those scenarios if either of them play out. And then lastly, I'm going to continue to watch the dollar if it's able to base around here and go for another run up into the 102 range, which can apply some pressure on the general market. And other than that, appreciate you guys as always watching this video, and I'll see you guys next time on Sunday.